This week, JP Morgan is hosting its annual Energy, Power, and Renewables Conference. This coming at a time when companies like Chesapeake Energy, Extraction Oil and Gas, and Whiting Petroleum and Diamond Offshore are nearing or have entered into bankruptcy. Brian Sullivan caught up with Jay Horine, JP Morgan's head of Global Energy, Power, and Renewables Investment Banking, asking him if he expects more Chapter 11 filings in the energy space this year.
It's a challenging time for a group of companies in the energy patch. There's no question about it. These companies are trying to transition to a new day of increased capital efficiency and lower operating costs in what is a challenging environment.
Do you think these companies would be able to tap the capital markets through debt or equity if they needed to now?
I think certainly a lot of them have shown the ability to do so. They've also done some self-measures. Some have cut their dividend, and others have gone about curtailing to an extent their capital expenditure plans. I think that the strongest companies have definitely shown their ability to tap the capital markets, and the banks have been able to work with them. And some of the ones who are struggling, it may not be able to continue to go forward.
Do you think the energy space needs to get smaller?
You have the better part of 1.5 billion people on Earth who don't have electricity. The need for a modern life requires electricity and energy. So on the one hand, you have that. I think that especially our oil and gas companies are very focused on capital efficiency. A lot of people are working with these companies towards a greener, more sustainable future, while at the same time providing reliable, affordable energy to everyone.
Do you think that there will be a U.S. oil and gas industry in 15 years? I mean, the way the equities have traded, Jay, when you look out, investors don't seem like they're giving it much of a long-term lifeline.
Well, you're exactly right. I think to a large extent, investors have severely discounted the longer-term prospects of a lot of these companies. However, even if you go through a variety of prognosticators around oil demand and oil usage, I still think it's going to be reasonably high. So I do believe that there will be a sector in 15 years. People shouldn't underestimate the ability of innovation and imagination around these companies and around the entire sector.
Companies have a very good way of making sure that they sustain themselves long term and they can evolve and they can shift. And I've joked with you and other people. I've said, why doesn't a big oil and gas company simply go out and buy a solar company or renewable companies? Do you think we could see some imaginative and creative deal making like that in the future?
Both our utility clients, our renewables clients, the oil and gas clients, they're all kind of coming together. You have things like LNG and other assets, if you will, that oil and gas companies own, utilities own, independent companies own. And to a large extent, it's around, as I said earlier, providing energy and electricity to an ever-increasing need for a modern life.
So where do you see the opportunity then from an investment and investment banking perspective, Jay?
Well, we see it in a number of ways. One is helping to finance people with their green initiatives. That can be solar, that can be wind, that can be battery storage and other kinds of innovation. Again, I think that we're really in the opening innings of this. It's things like LNG, which helps people transition from coal to a gas future. So we see across the spectrum opportunities to finance and advise clients as they put capital to work, as I said, again, around the globe.